What's going on, everybody? It is January 2nd, 2024. This is going to be a daily log episode over NQ and kind of the current state of the market to start off the year. So I'm going to be back on YouTube. I actually tweeted out today. I'm kind of just asking for suggestions and things to post as far as content wise. If you haven't been up to date, check out my Twitter. Go to the highlight section. I've been posting daily logs for probably about 2 or 3 months consistently on there. I know some people have issues with it, and the only reason I was doing it on Twitter is because I found it more convenient, at least the uploading process, and it was just a lot easier for me to do it. So if you miss those, feel free to go over to my Twitter. All of them are highlighted in the highlight section page. So um, I would also really appreciate it if you guys could just go over to my Twitter, give it a follow, even YouTube. I know even myself, I'll watch videos consistently from creators, and I forget to follow and subscribe. It does mean a lot, putting in a lot of effort and time into these. So I generally love doing these. I do them for the sake of helping other people, and even myself. When you get down to it, it is a good process to go through. If you can, teach it to a child or somebody who is obviously not at a mature age, if you could teach these concepts in a very simplistic manner, that means you have a very good understanding of a very vast knowledge in this. And I'm only saying that because if you feel like you don't know enough or you don't know where you're at, try to explain it to somebody else. Try to explain these concepts to somebody else in a very symptomatic way, because if you're able to do that, it's probably a good tell that you have a good understanding of these. So hope you all have been well. It's gonna be no different than Twitter if you've been following me. So looking at NQ on the weekly, let's jump out to a monthly, right? Let's start off with the whole brand new year. I am starting with the continuous contract. So yes, I'm using the continuous contract for a few reasons. I'm able to get more data where we're at currently on the higher time frames. The continuous contract shows me certain inefficiencies and PD arrays that the current contract does not have. So if you went over to it, this is the only one that we can currently obviously place a trade on, which is the March contract 2024. But if you want to use the continuous contract like I do to at least annotate the chart, see where things are at, because if you look at the current contract, you're not going to get certain inefficiencies that you're going to get on the continuous. Example, this fair value gap here, you're not going to see that on the current contract. So there's a few things that the continuous contract can lend you in terms of giving you more evidence, right? As far as what I'm looking at this year, I'm going to try to make this very simple. We are in an election year, and if you just started trading, you're not going to understand the power of what an election year can bring, especially when you near towards the end of August, September, you get around the voting date, a lot of things become hairy in terms of price, in terms of just geopolitical, right? Not going to get into it, but just be very weary of this year. Be very weary of what you're going into and the events and the things that are going to take place, right? So what does that mean for us? Because obviously I'm not saying that for no reason. This has an impact on the market. And you have to be very weary of this. You have to be aware. You have to understand what's going on and why prices are moving where it's going to. Now, looking at NQ and looking at ES, looking at YM, looking at the bond market, dollar, I think NQ will at least reach all-time highs this year. Once we do that, that is going to be the consideration point of where we have to go next. Because after you reach all-time highs, we are now in what I call basically no man's land, because there's no other old liquidity pools to target. There's no old inefficiencies to look for, right? So all we would have to the only thing we could look at is the run that got us above the all-time highs. So the reason I'm stating that, and it would be a long in-depth video, but if you go over bonds, you go over a dollar, which I will over the coming weeks and months, NQ, ES, and YM, I think they're all going to reach all-time highs, at least for NQ. Looking at the monthly chart here, we retrace down into this BISI there. In the last 2 months of the year of 2023, we expanded very aggressively, right? So all of these down close candles will act as a bullish order block. So annotate that. Small inefficiency here that we utilized back in July of 23, even August, and then we shot right through it on December. So I'd be looking at this as a potential inversion level coupled with kind of these last down close candles, targeting the buy side liquidity above the old highs from November of 2021. Now, if you look at the weekly chart here, if you were up to date on Twitter, this inefficiency here, I've had annotated for weeks now, beautifully delivered up into it. Buy side liquidity pool residing above it. Just because you react off of a bearish PD array does not mean that price is bearish. It depends where you're at in the program that you're in. But since, to me, on the higher time frames, the parent is telling us that we're bullish, all that bearish PD array is really going to do, at least in my eyes, is just lending a small bearish retracement, digging into a discount, taking out any sell stops before we run higher, right? So looking at where price is currently, we're sitting inside of a BISI here. So today was the first trading day of the year, and we had a massive down day. I don't trade basically probably up until really with live funds. I would say the second week of January, maybe moving into the third. You still can. I'm not saying you can't, but I would rather let the tone of the year start to play out. Because I guarantee a lot of people today, either A, they got caught off sides or they were in a lot of profit. And today just seems like a very low probability day in general just to be a part of. It's the first trading of the year. There's a lot of new traders, a lot of liquidity probably being pumped into this. So don't feel bad if you didn't catch today's move. It's part of being disciplined. Could have went 1,000 different ways. Looking at this, I really do like the way we're potentially setting the low of the week. We may want to dig a little bit further. Tuesday, technically today is Tuesday, but I'm looking at a holiday week. Tuesday, classic low of the week profile, potentially get us out of here. Like I said, this type of trading in the first weeks of January is, to me, low probability. ICT talks about it. It's something that I would rather let the tone take place. I'd rather let things unfold and then give me a clear vision on where we're going to go the rest of the year, at least the quarter. I'm looking at the daily chart in here. Take this away. We have a BISI, buy side imbalance, sell side inefficiency beneath us. So I'm curious to see if we want to dig into that. I don't think we'd do it tomorrow. Looking at price currently, I've talked about this before. It could be one of those days where you're setting up a fair value gap. So tomorrow may potentially end where the wick would look like this, and then you're forming a fair value gap here. That's the way I'd kind of view it. Don't ask me why I view it like that. It's just more or less experience just looking at the structure of price. Let's dig into today. We dropped down underneath sell side liquidity pool. So we had relative equal lows residing in here. And I believe we took out the sell side liquidity pool underneath the low there. So coming into the open, London already expanded a lot, and even prior to the open, which is not my favorite type of conditions. If this was, out of January, not the second day of the year, and this happened, it's not particularly my style or cup of tea, is where you're expanding a lot pre-open, and even during the open, you're dumping or you're moving higher very rapidly. Those type of days, sometimes it can catch me off guard because I don't want to sell into discount, nor do I want to buy in a premium. I don't want to be caught trying to buy the top or longing the bottom of something. Of course, there's situations and times where you can do that, but given the time of year, I was just weary of today, and I didn't want to place myself in a short at the bottom here. But I will review it. This is a really, really nice entry from last Friday. Like if you're a swing position type of trader and you're able to hold on to positions overnight or even into the weekend, this 1 hour SIBI here, we're retracing up into that Friday, close off, open up, and then we sold off coming into London session. Really nice movement. At that point in time, you can clearly tell if you look to the left of you, there's no bullish PD arrays for price to retrace into, to react off of. So if you're ever wondering, what price is doing, or what program, I should say, you're in, whether a buy or sell program, look at the left side or the right side of the curve, particularly the left, and you see how there's nothing in here that is, as far as inefficiencies or order blocks, breaker blocks, whatever it may be, there's nothing in here that's inefficient. Everything's already efficient, right? So all of this is a trend line phantom, which is what ICT calls it. And it's just underneath all these lows, our sell side liquidity pool. So if you're a retail quote unquote trader, you would have a trend line that's looking like this. So imagine where all the sell side liquidity is residing. We sell off in here. Let's go down to like a 15-minute chart or maybe a 5-minute chart. I'm going to take these away for a second. And you can see it's just a very trending day, I should say. To me, it's really not the cleanest. There's very few entries that I would have particularly liked. I would have liked at least a little bit further retracement. And it just depends on what asset you're trading. NQ was the weakest out of the three today. ES had a little bit better retracements, had a little bit better premiums before selling off, and then YM was a little bit stubborn on selling off today. So you can pick and choose what you want to trade. If you're only particularly, looking at one asset class, then you have to just know what that one is. Is it the weakest? Is it the strongest? Is it kind of in between? You have to be looking at all those different indexes, because if you're not, then you're not seeing SMT, you're not seeing if the market's decoupled, meaning if they're doing different things, the decoupled market is not particularly the best environment to be in. You want them all in sync, moving in tandem with each other. I had this question on Twitter today. Something particularly about YM, ES, and Q. If you go through ICT's videos, he talks about decoupling, and it's just that, where the indexes, or even dollar index, even bonds, they're not going to be moving in sync with each other, which creates a lower probability environment. Looking at the open, as you can see, this is all prior to the open. It's not my particular profile that I like. I don't like a lot of large movement before the open. It can create seek and destroy profiles and can create consolidation profiles. So I'm weary of this. And you can see right at the open, we retrace right up into a reclaimed fair value gap. And I'm not saying that I would have taken this trade or there was anything in here particularly that I liked, but you could see that we dug up into it, the open, and then we sold off. Fairly aggressive. 1 minute time frame. Again, there's nothing in here post the open that I could have even looked for. There's just really nothing in here. And I don't feel bad. I don't feel upset. I don't feel angry at myself for missing out on a day where there was a lot of large movement, but there was no entries. There's nothing in here that I would have taken, even in hindsight. Even down here, it's not my particular style because we've already moved a lot prior to the open. During the open, we're inside of a deep discount. I'm really not trying to chase shorts. And the best option for me is to sit on the sidelines and wait to see if we can get some type of retracement where we're taking out buy side liquidity. We're getting a short-term premium retracement before dropping off lower. And if I don't get that, then I don't do anything. even if it moves to exactly to where I thought price is going to go, I do nothing because that's following my discipline, that's following my rules, and over time, that's going to build up. Because if you start to color outside of your own discipline, your own rules, then you're going to have inconsistent results. You're going to start having losses and errors and mistakes that you don't want in your trading. So there's going to be days like that. Discipline sucks. It's a bitch, and it's something that you have to deal with because it protects you. And now, if you make a mistake and there was an entry and you didn't take it, then of course you have to journal that and learn from it. But to me, there's something in here I would have taken. So combining that with the time of year, it just is what it is. So overall, just a very large movement today out of INQ and the other indices. Pretty nice to see off of the open of the year. I can cover ES real quick, just give it a brief overview and YM. Just looking at the weekly and the monthly charts. So you can see here, let's go out to, I think this is the weekly. I think YM will most definitely reach all-time highs this year. So that's what I'd be looking for on YM. Looking at ES, you can see how this is the weaker of NQ and YM. So YM is relative to its all-time highs, very close to it. Same with NQ. It's closer than ES. So this would be the weaker out of the two if you wanted to look for longs. Doesn't mean it's not going to go higher. It's just going to be a little bit harder to look for longs, right? Let's go over dollar index here real quick. And this is really where I'm getting a lot of the sentiment as far as all-time highs is if dollar will continue to drop off lower and it continues to erode going lower, that's going to push all of them higher. And bonds go higher, then that sets the stage for all-time highs. At least in my opinion, that's what I've been leaning towards. We've gotten dollar index pretty much on point ever since we got up into this fair value gap in here. So monthly SIBI dug up into there, dropped off lower. We have this BISI here. Closed right above the premium end. Weekly time frame. Can't remember the last time I talked about it on a daily log, at least on Twitter, but this fair value gap I know is annotating, and we just slightly IOFED'd it, and then we sold off going lower in the last few weeks of last year. Looking at the daily chart, I think this is a small inefficiency there. Now look at the close today. That is a really wicked closure from the SIBI there. So to me, this is what the first day of the year trading looks like, or something like we are coming off of holidays. We've came off of 2 major bank holidays. So you have to be prepared for something like this. This may just be, I haven't looked at dollar index. Sometimes the dollar index does have wicks right from the open that you can't ignore. ICT's talked about this. No matter what, even with the TVC feed, it's going to happen. So this may be a little bit incorrect as far as the daily time frame. I would have to look at something else. So I'm curious to see where the rest of the year plays out for dollar index. I would like to see lower prices as far as the weekly time frame. You can see here even the weekly time frame doesn't have the wick lower. So that's really where price is at. I know that may be confusing or weird, but that's, if you've paid attention to dollar index, it does this a lot. The weekly inefficiency here, plus this bearish order block, those are the last 2 point of interest basically for lower prices, right? So I'd be looking for dollar to reach up into here and then for us to expand lower. And if we can do that, that'd be really, really nice. We have an inversion for value gap here. So if we can have a retracement, remember, just because you're digging into a discount PD array doesn't mean that you should automatically look for longs. Same thing I talked about on NQ. just gives it a short-term breathe or breath to retrace higher if we are going to move off lower. I can already tell I'm losing my voice, so I think that's going to be it for today's video. I'll do my best to upload as much as I can. I plan on it every day. I may do a couple new things moving into this year as well. So stay tuned. Appreciate all you. Until tomorrow, good luck and good trading, everybody. Be safe.